intrigued to see what you think, Simon, here. But Dani, I'll let you go first.
Yeah, well, I don't think they will drop any further. As I said before, I think probably February, because as you know, naturally spring, people already get out there and start looking at properties. If we add that on top of reducing the OCR a bit more, we might create a little bubble too early. So I don't think they would make that decision, probably wait until after summer so we can balance that out.
Interesting.
You go, Simon.
Okay.
Very sensible, very sensible. Maybe we should get you on as the governor. I think.
Guys, welcome back. Andy here, your host today on the Home Seekers podcast, joined with Simon, a regular on the podcast, and also joined by Dani, a financial property coach and avid investor. Been in the office today just to talk about your journey, and I pulled you in last minute to kind of talk about the OCR changes because, man, bloody exciting stuff, because we saw 2 p.m. on Thursday. I think it was Thursday? Thursday?
Oh, Wednesday, yeah.
Wednesday when the OCR did drop. Simon's phone at 2 p.m. was just blowing up. Simon, what was happening? What were these calls all about?
Yeah, a lot of the people are actually people that are already pre-approved. And so they were on the fence about on one specific property or another, and now they're ready to go. You know, this has given the confidence back for them to press the go button. And so, yeah, I'm excited as well, ready to meet the market.
Yeah, and your line of work, did you see much of a difference with the people within which you deal with on a daily?
Yeah, it's interesting because I think for you guys, you probably got a lot of calls just like at 2 p.m. when the 2.5 has gone down.
Yeah.
It feels like everything has changed and how that has a flow-on effect on sentiment from people as well.
Yeah.
But basically, like a day before was just 2.5 more. And obviously, I think you guys would agree as mortgage brokers that will take a while. We've seen the banks already taking action, but for that to reduce and feel like it's, you know, a good day, a 5% interest rate as it used to be before.
Yeah, well, I think, was it 3 or 4 years or 5 that we saw actually come below that 6%? 4 years, something like that. It's kind of crazy. And what I'm kind of looking forward to is that we've got a lot of mortgage holders who are going to actually find relief. You know, in a small change with big mortgages, you're actually going to find a relief and a little bit of help. And the question I think I pose is like the RBNZ had the whole idea of September next year with this happening. You know, that was their original predictions. Then maybe, you know, November this year, and here we are with the first drop. It poses a question if it's actually going to happen again in November. Is it going to constantly just keep coming down, down, and down, or what do you guys reckon?
I think they're probably just going to wait for a bit more. My prediction, and again, we're all just trying to get a crystal ball here and make predictions, but I would say probably in February, after like end of summer, beginning of March, that's when they will do the second drop. It's easy to get really excited, but probably it's not going to be as fast as we would like to be.
Yeah. Well, what about you, Simon? What do you think? Because before you talk, 2 weeks ago we sat down here, right, and he goes, I'd like to see it stay the same. I don't think anything is going to change. Yeah. Here we are. I'm excited to hear what you're going to say right now.
Yeah, I'm still have that sentiment that I feel like it may have been a mistake. Like people talk about, he's trying to defend himself not making a pivot. I don't know how he can defend himself doing that. Going from nothing's happening until September next year to maybe there's going to be a couple of cuts before the end of the year. Seems a bit crazy to me, a little bit too fast. I think I'm finding the more experienced investors, the ones that have prepared, are actually not concerned about where the OCR and interest rates are. They're more concerned about inflation.
Yeah.
And so I would have preferred it not to cut. I would have liked to see it stay where it was, and for people to feel it a little bit more, and then hopefully what that constitutes is actually better growth organically.
And this change doesn't mean the market's going to be changing just with property, right? Yes, inflation is smoothing. We're in a position where they're still expecting unemployment to rise. So there's still definitely problems within the economy that we're seeing. But, you know, you look at America, the Fed, they've also dropped their rates. And I guess the monetary policy is somewhat doing what it should be doing over here too, for them to feel confident. And I actually quite like that they had this prediction and they're looking at the data and feeling like now is the right time to try to stimulate the market. But if we turn this in around and think about, well, what does this mean in a practical sense? We've talked about testing rates, stress testing rates a lot. Now, Simon, I know today there were some changes with a few banks. What can you share on that front?
Yeah, there's been several banks that have pretty much immediately over the last couple of days dropped their interest rates. Floating rates almost immediately. Several of the banks have actually dropped some of their fixed rates as well, short term. And additionally, 3 or 4 banks have actually dropped their servicing test rate. And for those who aren't aware, the servicing test rate is the thing that allows you to borrow more money, right? Yep. The interest rate is what you pay on your fixed or floating mortgages. And so what that means is that you're effectively able to borrow more money now than you were 3 days ago.
Yeah, and the caveat here is that it's funny because I did see 2 different banks drop their stress test rate. One was lower than the other, which goes to show that not every single bank is doing the same thing. Now, Dani, in your line of work, you're talking to a lot of people, coaching them through the property side of things. And obviously this has just happened so far. But over the last maybe couple of months or even weeks, what sort of confidence are you seeing from your clients that are wanting to either get into investment or buy their first home? How are you finding it?
It's really interesting because everyone was saying, I'm going to wait for interest rates to go down before I get my next property. And usually people get fixated on interest rates if they're starting on the investment journey. But the thing that we often forget that the interest rates will always change, but you can't buy. Today will be the cheapest price you can ever get a specific property for. So it's almost like focus on the journey and the deal that you want to get more than the specific rate. Obviously, you still have to test the numbers and make sure you can make those repayments. But most of my clients, some of them have joined after have bought, a property while the interest rate was like 2.99, and then suddenly now they're coming off into a 7% that was just like a few months before, and they just cannot service it. They're struggling a lot. So it will bring a lot of relief, and I agree with you as well. That's probably going to take a while for anyone to be in that position to be able to borrow more. Now they just want to take a breath and feel like they can live life again.
And it's interesting because the people in which we speak to, it's like, should I only fix for 6 months or 12 months? Should I go floating? Because you're trying to beat the market every single time, but that's not the right approach, is it, Simon?
No, I think you're totally right, and it's a really nice and fresh perspective sometimes to have someone who's got that experience as an investor. Is that we as a society and humans in general, we're very quite predictable, and it's not good because people are getting out at this time when it's the time you want to load up on your asset base, and so there are some people that are getting it, and they're going to do very well. When the market recovers and starts to go back up again. So I'm excited for that time, and I'm preparing for it.
Yeah, but it's interesting you say like now it's the time to buy, obviously, and I agree. But for people that don't understand the full market cycle, obviously if you're trying to buy on a low market, it means that also it's harder to borrow from the bank right now. The testing rate is really high. So many people can't even get their pre-approval. And that's why I always say that it's about the long-term strategy. There's no quick wins with property because whatever the property you buy today is going to dictate if you can actually buy another one in 5 years from now. It's good to say that they should be buying, but if you can't service, and obviously the yield you're going to get from all those other rentals will either dictate if you can get another one or not.
Well, it's time in the market, right? It's not timing the market. And I think that's something that's quite critical. And you, Simon, touched on it earlier. It's really important that when you're looking at buying property, you're talking about the overall strategy. You're not talking about, can I get the best rate? Can I work on these rates? Because we saw what happened in 2021 and 2022 and where we are through now with huge interest rates, big mortgages, people can't afford them. It is about that strategy, right? Now, the OCR drop is a good move to provide a little bit more confidence in the market, but we still have an oversupply of property within the market. So we still have people there taking their time. They're not buying the properties, they're waiting, they're choosing, and that isn't always a good thing, which is what we have touched on before. But what I think this could potentially do is maybe think, well, now maybe more people are going to come into the market. Maybe they can borrow another 50K, which is going to get them across the line with these drops, provide a little bit more competition in the market. I'm just really intrigued to see what's going to happen, because after watching Simon's phone just kind of blowing up and the rest of our team here, there's a lot of hype out there, but that can also cloud judgment, right? Like, I know that I think you've talked about this before as well, how it can cloud the judgment of people just because they want to get in the hype train or they got FOMO or anything like that. It's not a good place to be in.
Yeah, because it's really easy for you to get excited or get very optimistic. Okay, now the 0.25 has gone down. Interest rates are definitely going down. I'm just going to go out there and get a deal before prices go up really quickly. And then you just take action based on FOMO, as you mentioned. And that's when you get in a position where you realize, oh, I actually got a dud, and now I have to correct that or even sell for lower than you bought. So that's what I was trying to alert people, like, be careful, because we will feel this way. We're going to get excited, but don't let the interest rates dictate your decisions overall, because it might not be a good one.
Yeah, and that's the whole idea about doing your analysis before. If you are looking at properties, making sure that the yield is good. But I think even before you talk about yield and capital gains, it's kind of understanding what the objective of this particular property is. Do you want cash flow? Do you want capital gains? Like, what actually is it? Short-term, long-term, medium? Who knows? That's what people need to figure out. But the good thing about this is it might stimulate the market. Plus, we're also coming into spring. Spring is known to push up the property values, but also start to stimulate the market a little bit more as well. So my question is, what do you guys think in November? Do you reckon we're going to see another OCR drop? Are you going to get on that train? Are you going to get on it's staying the same? I'm intrigued to see what you think, Simon, here. But Dani, I'll let you go first.
Yeah, well, I don't think they will drop any further. As I said before, I think probably February, because as you know, naturally spring, people already get out there and start looking at properties. If we add that on top of reducing the OCR a bit more, we might create a little bubble too early. So I don't think they would make that decision, probably wait until after summer so we can balance that out.
Interesting.
You go, Simon.
Okay.
Very sensible, very sensible. Maybe we should get you on as the governor.
Yeah.
I think I'm going to pivot with him. I think there might be another cut. This is coming from someone who's like 3 weeks ago thinking there wasn't going to be a cut for the rest of the
It wasn't 3 weeks ago, it was 2 weeks ago, but that's
2 weeks
okay.
ago, yeah. So I think the biggest thing though that I'm worried about is the fact that if he's pivoting, what are other people going to be doing as well? And I do worry about another premature taking off of the market. But I do think there's going to be probably another cut, and the reason why I think that is because the reason why I think he's pivoted now or cut now is because of the data that's come through from overseas and what that means, and also domestic inflation. Some of the pulse surveys as well that have come from overseas, the sentiment that's been reflected. I don't think it's the right thing, but if I had to make a bet, I'm going to change tack. I like it.
Yeah, I like it because this is a man that we talk a lot, and he's not changing. I like how you're pivoting. You're pivoting quite nicely, and I'm happy about that. So I guess where we sit right now is that what this really does mean for current mortgage holders is that there's some confidence that things are going to start to change, and not the property prices, the rates are going to slowly come down, which is a positive for a lot of mortgage holders who are coming up for the renewal. But not only just coming up, but those who have just maybe refixed, they know they're going to be in a better position once this is all sorted out, because there's still so much in the air that we don't know. For people who are looking to purchase property, we are going to start to see potential test rates drop, meaning you can service more debt. So in the property side of things, I think there's a lot of positives. Before we tidy up, any of you guys got any lasting comments about the OCR, what you'd like to see, the rates?
I have a question for you guys, because I get asked this question probably 3 times a day. For how long should I fix? And is it worth, if I'm refixing, let's say in October, just to live on the floating rate for now, and then I might get, a better interest rate in 2 months' time? How would you?
I'm going to let Simon answer that one, because I think I've got my own, from being an investor and a property owner, I've got my own personal thought, but I'm going to let the expert talk about it first.
Thank you, Andy. I think what we try to focus on is not necessarily trying to predict where interest rates are going, but the reduction of risk. And the way you do that is by just having a sensible spread over different terms. Your loans aren't coming up all in one go, so it doesn't matter what happens with the fluctuation of interest rates. You're getting an averaging effect. And you touched on this about the importance of the investment itself, right? Is it a good deal? Is this asset going to stand the test of time? And is there margin in the deal? And is the deal cash flowing or not, or neutral? And does it fit within your wider goals and your portfolio? So in short, spread them over different terms, and then you layer on top your own predictions, I guess. And a lot of people are saying, interest rates are coming down. So instead of, for example, recommending a 1 and 2 and 3 year split evenly in a normal market, I may say, hey, like a 6 month, 1 year, and 18 month split, where you have more weighted towards the 6 month.
Yeah, I'm very similar. I think it all comes down to someone's risk appetite as well. If you want to take the risk, you want to try and ride the market, that's at your own peril, right? Or benefit. We are a society, New Zealand's oddly short-term lending, short-term timeframes is what they love, like 6 months to 12 months. Typically like 12 and 24 months.
Will be the standard.
It's normally what's going on, and where we are right now is I think it's going to be the same, but as Simon said, maybe 6 and 12. Simon is my mortgage advisor as well. We led mine, so it was 6, 12, 18. I think we might have got one at 24, which we'll have to talk about soon, because there is chance as well for people to break their mortgage if it does work for the long term. That's another conversation we'll save for another podcast, I think, because there's a lot that goes into that. For me, it comes down to your risk appetite, your long-term goals, your strategy, but also if you really want to test the market, go for gold, but doesn't mean you have to listen to us either. Like we will recommend what we think based on your position. If you don't want to listen, that's completely fine. Do what you think is right as well, but take the advice from somebody else. So rates, I'm probably on the board with Simon. I think that's the best thing I could probably say right now too, isn't it? So yeah, so we'll go from there. But
Danny's going to come back and rub it in our faces when we're both wrong.
Yeah, I'll make sure I do that.
Yeah.
Well, the last question I have is, Simon, can you give me a pre-approval to buy another investment property?
Yeah, absolutely. Come through. Let's have a conversation. We'll get you pre-approved. I'm sure based on what I've heard about you, you can be pre-approved. You don't need pre-approval, so we can go for a live deal.
We'll leave it there. Look, Danny, really appreciate it. I know this was not planned. You just popped in, and I happened to be able to drag you into the room to get this done. And Simon, as always, I appreciate you joining today as well to talk about something that's relatively exciting. And I guarantee you in the weeks to come when we kind of have these conversations, it's always going to be coming up for conversation. And if we can get you back on maybe later on this year when the OCR drops again in November.
I'll make sure I'll be back.
We'll be back and we'll be talking about predictions for 2025. So once again, thanks so much. And Simon, let's do it again soon. Cheers. Thank you everybody for listening, and follow if you haven't followed, subscribe if you haven't subscribed. Also want to understand from everybody that has got this far, down in the comments, let us know what you think is going to happen in November. I know last time we did this, there was a lot of comments that came up, and I'd love to understand what's going on through your mind. And if there's anything that you would like answered, you'd like us to bring up, we have done it before, we will do it again. Let us know, and we might shout you out. Till then, thank you very much.
Bye.